Hello, my name is Steve Livingston. I'm a director and founder of IP Tax Solutions, Innovation Tax Specialists. We help companies in structuring financing under SEIS, or the Seed Enterprise Investment Scheme, EIS, Enterprise Investment Scheme, and also obtaining incentives under the R&D Tax Credit Scheme and also the new Patent Box regime. This is a very short presentation on the Seed Enterprise Investment Scheme, some need-to-know tips. I'm going to rattle through some very high-level tips. Take no more than about 3 minutes, so let's see what we cover. Firstly, what is SEIS? It's a tax incentive aimed at early-stage companies, so obviously seed there being the key. It provides tax relief for investors rather than the company itself, and it's aimed at helping startups raise funding, so maybe companies like yourself. What are the tax benefits? Well, they're really driven around the investor themselves. They get 50% income tax relief on the investment. So for every £100, it actually only maybe costs them £50 once they can claim the income tax relief. They have a capital gains tax-free sale after 3 years, so if all goes well, after a 3-year qualifying period, they can sell those shares and any profit or gain is tax-free. There are inheritance tax benefits after 2 years in holding shares in your trading company. And there are some specific capital gains tax sweeteners, we call them here, for the year ended 5th of April 2012, which is the first year of Seed Enterprise Investment Scheme, and also the year to 5th of April 2013. I won't go into the detail here, but it basically allows investors to wipe out capital gains they may have incurred in those years by investing into companies maybe like yourself under Seed Enterprise Investment Scheme. So which companies qualify? We're looking at companies that have been active for less than 2 years, so relatively new companies. A total balance sheet assets of less than £200,000 immediately before the investment lands. Less than 25 employees or full-time working equivalent. And they're going to be carrying out what we call here normal trading activities. There are certain excluded activities, and there's a specific list which HM Revenue and Customs have, and you can access that online. It tends to be things around property, actually legal and accountancy is included as well. But if you're developing some sort of software, or you're a digital company, engineering, or something, I say more ordinarily normal trading activities, you should be okay, but you would need to check that list. And you've got to have a UK tax presence as well. So how much can you raise? Well, you can raise up to £150,000 under SEIS. You could follow on with EIS. So companies under EIS, again the big brother of Seed Enterprise Investment Scheme, can raise up to £5 million per annum, as the rules currently stand. You could follow on. I say you have to have spent 70% of your cash under SEIS before you could follow on with EIS. And also want to watch is, if you've already raised money under EIS, you can't then go to SEIS. It must be SEIS first and then EIS. Every individual has a £100,000 annual allowance to invest under SEIS. So next steps, if this sounds like it could be of interest to you and you're looking for funding for your company, what do you do next? Well, it's good practice to seek advance assurance from HM Revenue and Customs that your company is a qualifying company for SEIS purposes. You can actually kill 2 birds with 1 stone during this process and also seek advanced clearance under the EIS scheme as well. If you think you're likely to follow on and need more than £150,000, which a lot of companies do, so you can cover that off. There is actually a form available online from HMRC's website, which you can use. I tend in practice to use a letter as well, so we can cover off things like the EIS clearance at the same time and give a bit more background if it's necessary. Take care when issuing shares to investors. You've got to watch timing, you've got to watch percentages. There are certain rules around connected parties, family members and that sort of thing, business partners. You have to be careful, so really take care and make sure you are familiar with those rules. And remember as well, it's a 3-year qualifying period. So having got the investment in place, hats in the air, don't forget you've got to remain as a qualifying SEIS company for 3 years and don't do anything to jeopardise that relief, otherwise it could result in a clawback of the relief for the investors. There is also a form to fill out for the investors as well once you've got the cash and it's been landed in the bank account, been received. 4-month period later, you've got to get tax certification on behalf of the investors. So if you want any help from people like ourselves, as you say, my name's Steve Livingston. I'm a director at IP Tax Solutions. We specialise in SEIS, EIS and various other tax incentives, as I mentioned previously. Email us at info@iptaxsolutions.co.uk. There's our website, iptaxsolutions.co.uk, or give us a call direct on 0161 961 0096. Thanks for watching.